Well, good morning. My name is Roger Scott. I'm the head trader for Wealth Press. Today is October 21st. The market's going to open up in about an hour and 15 minutes, and I want to give you some pre-market opening ideas. Now, my analysis is usually short-term and medium-term, so you can apply what I'm doing intraday or end of day as well. These are not time-sensitive, minute-by-minute type of things that you only need to apply now. So this analysis should help you throughout the day and possibly throughout the week as well. So let's get into it right now. I want to go through the overall market. I want to show you some levels that are concerning right now, go through volatility, go through some sectors, and then show you the worst three biotechs right now on my chopping block. Let's get into it right now. So let's go through the news. We got stock market mostly lower overnight. It's subdued. It's down about 10 points on the Dow right now. Nothing really to write home about. Asia closed higher as investors welcome a batch of solid earnings. Earnings are big right now. We are I think we're about 70 stocks into the S&P 500. So by the end of this week, we'll have about a quarter. And right now, the expectation's about negative 18 something percent for the quarter as a whole on the S&P. If the number starts looking better than that, with all the revisions that they've done lower and so forth, then we may head higher. But right now, I'm still very, very concerned because the market has not been able to take out the high that was made on September 2nd, except for the Russell 2000, which is favoring Biden. Again, don't hate me, I'm just a messenger, but Biden and small caps are in line. Why? Because of the trade war. Because if Trump wins, he's going to push this trade war down everybody's throats, and that's causing the small caps to sink because they're a lot more vulnerable than the large cap stocks. So the fact that the small caps are rallying and the fact that the evergreen stocks, the renewable energy stocks are rallying is showing me that Biden may still be leading. Again, I'm only going by market action. It's been wrong before, but again, I'm only pointing out what I'm seeing in the market. So markets are subdued right now and are hoping that they're going to get 8 before the election. And I think that's Trump's plan. That's what I would do if I was him. I would start, talking about giving 8 before the election to boost up my expectations on my results. But again, that's just me. Investors are nursing the hopes that Democrats and Republicans will reach a deal. That's what I'm hoping for. That would really go a long way to sprucing up some trading action and causing momentum to move into the market. Negotiations on huge COVID-19 relief bill took a modest step forward on Tuesday. I don't like the way that sounds. Though time is running out and Senate Majority Leader and President Trump, most powerful Senate ally, was pressing the White House to move ahead. The office of Pelosi, don't get me started with Nancy, said talks with Treasury Secretary Mnuchin were productive, but other veteran lawmakers said there's still too much work to do and not enough time to enact a bill by November 3rd. That's bad. Very, very bad. Maybe he'll take the trade war off the table. He's got to do something. I'm thinking Trump will do something. He's got to do something before the election. Stocks have been mostly pushing higher this month after giving back some of their big gains this year. Oh, yeah. Take a look at September 2nd. That's when stocks made all-time highs. The benchmark 500 has notched gains in each of the past 3 weeks, but it hasn't been able to take out the September 2nd high. Big tech stocks have investors. They are the favored because they're the big stay-at-home stocks, because companies are expected to do well during the pandemic and after the pandemic. U.S. government antitrust action against Google this week has done little to hurt its shares, which is very positive. Corporate earnings remain relatively upbeat. Remember, that's after being revised lower 100 times over the last 2 quarters. So I wouldn't put too much into that. With wireless technology, Ericsson. Who told you about Ericsson doing better than expected, and Tesla due to report later? By the way, Ericsson is up, and crude oil, by the way, is at $41 a barrel, which is right at the price level that U.S. frackers pay to develop it. And if you look at Ericsson, one of my stocks for the COVID-19, it's up about 8.27%. It's going to report earnings. And if you want to see the little, show you the little analysis here. Let's see here. Ericsson, here we go. Swedish telecom equipment maker had reported upbeat third quarter earnings helped by a rollout of 5G wireless network in China and strong U.S. market. Stockholm-based said Wednesday that the net profit for July-September period was sales were up 1%, 5.6 billion kroner compared to a loss. Wow. Look at that, 5.6 gain compared to a loss. That's very, very good. The company's contracts for the next generation of 5G networks in mainland China have developed according to plan. This is very, very positive. Remember what I told you guys. Nokia and Ericsson are the biggest supplier of 5G towers and parts. So anybody using 5G has to go through Ericsson and Nokia. See, Ericsson and Nokia got smart. Back 20 years ago, they were making phones. They got burned. So they decided to go one layer back into the industry and make parts for other phones. So not parts, but infrastructure. So they have infrastructure. Look at this. Ericsson says it has 112 commercial 5G agreements with 65 live networks with different operators. Nordic rival Nokia plays catch up, secured 101 commercial. The bottom line is Nordio still trails market leader Huawei. The bottom line is Huawei is the big dog in China, but Ericsson and Nokia are the big dogs in US. Let's see how Nokia is doing in light of this, just out of curiosity. Before they open up, it's up 1.43. But Ericsson is up over 8%. And I told you guys that 5G would start happening. So keep your eye on the stock. It's up 8.36%. Now, I want to talk about the S&P 500. Notice we still can't take out the high that we took out September 2nd. Moreover, the S&P is really, really close to the 50-day moving average. That's not positive. If you look at the QQQ, you will see exactly the same thing. Let me put the study here so we could see how far we are to the 50-day line. Right there. High. We got to take out this high. Before we take out this high, I'm not getting bullish on the indexes. Now, if you look at the Russell, which is favoring Biden, because Biden, small caps love Biden. Look, it took out the high September 2nd. This is very, very bullish. Moreover, if you look at the major indices, and I don't like this, if you look on a 1 month basis, you got utilities, the most defensive sector, with the most offensive or speculative sector, and the second one. That's not positive. That's negative. That's called a fragmented market. Now, if you look over the full period, you got discretionary, technology, basic materials, and industrial utilities. Healthcare is all the way to the bottom. This is a fragmented market. Until the market stabilizes, I think it's best to be defensive. Also, volatility. Look, this is the peak, the COVID-19 peak, and then we went lower, lower, lower. But look, over the past several months, we haven't been able to go lower. Volatility is still, look at this. I want to show you something. This is the average. The average is around 14, 15, 12. We're around 30. We're twice the average volatility. So we are still in fear mode, okay? The market is still in fear mode, and I would rather you short overbought stocks right now than go long stocks that may not rise. So that's why right now I am looking, and I'm going to show you these three stocks. Look at this, VRTX, it's the weakest stock right now. Guild, the weakest stock right now. BIBB, very, very weak. The only one in between is BMRN, and boy, they took a dump. So let's take a look at some of these. VRTX. I think what's happening is when the COVID first came out, all biotech started rallying, but the closer we're coming out to the actual vaccine, a lot of them are taking a dump. Look at that. Boom. That's a dump. I would wait for it to break lower, sell around the 212 level. Let me show you another one here. Where are we? What am I doing here? Here's Guild, another one. Look at this thing. Not good. Not good. I would sell right below the 60 level, around 59.50 level. I'll give you another one here. BIBB. So again, if they're not coming out with a vaccine or if there's nothing crazy on the horizon, they're not looking that great. I really like this one here. I would sell right below this level right here, 264.70. And I'll even give you one more. BMRN. BMRN. We took a big loss on the options on this one. And I'm not liking the stock at all. Look at this. I would wait till it's below the 71 level. It's not there yet, but I would, or actually, you know what? I wouldn't even go that far. I would wait till it's below the 73.50 level. Sell at 73.50. Again, these biotechs, and I'll give you all of them right now: VRTX, Guild, BMRN, BIIB. I was going to give you 3, but I figured I'll give you 4. So these 4 biotechs you don't want. They got really, really strong after or during the COVID pandemic. All the biotechs went up with the rally. It was like a wave higher. If you're a biotech, you're going to go. It was like the internet in 1995. If you're an internet company in 95, you'd go higher. So again, but finally, investors, traders, banks, institutions, analysts realize not all biotechs are going to give us what we want, which is the cure for or a vaccine for COVID-19. And these 4 are definitely not going to do it. VRTX, Guild, BMRN, BIIB. Now, I've got something really, really big for you. I don't want you going anywhere. I got something really cool. As you may already know, many Robinhood traders have been flooding the stock market. I think volume is like 25-30%. I mean, it's crazy, crazy. All stocks, I think 50% of all stocks under $5 have been bought or sold by retail investors over the past 6 months. But what you probably don't know is they've overwhelmed Wall Street. They have. You see, the advantage is no longer in Wall Street's hands. It's in our hands. Now the retail trader has the big hand on Wall Street. All right? Really, I'm not kidding. We have the advantage. Now, I've spotted a trade that could literally triple in value by the end of this week. I spotted Ericsson. It's up 8% before the opening bell. Oh, yeah, it's like that. And I really do suspect, I'll find a lot more of these winners very soon. The market is gearing up, folks. Ready to learn? The easiest way to profit from stocks in 2020? I'm not kidding, folks. Robinhood traders, they have the edge now. Before, Morgan had the edge. Fidelity had the edge. Now, Goldman doesn't have a candle, doesn't hold a candle compared to these Robinhood guys. You got to check this out. The advantage is in your hands. And I'm going to show you how to take that key and unlock it. Are you ready to profit from 2020? It's still not too late. Click on the link below to check out my trade today. Do it now. I'll give it to you. You don't want to miss out. Gain that advantage that retail traders are gaining right now over institutional traders. Follow the link below and have an amazing day. Bye, guys.